What's up, guys? Welcome back. So if you guys are investing in crypto, you guys know that there's a lot of pain in the market as crypto has been selling off pretty huge in the past day. Now, I've been in crypto since around 2017, and I've witnessed the whole boom and bust cycle when Bitcoin went up to $20,000 and dumped all the way down to a low of around $3,000. Now, if you guys have listened to any other episodes on my show, you guys know that I focus on analyzing high-growth tech stocks for multi-bagger returns. And I haven't talked about crypto yet on my channel. However, I decided that today I want to talk about crypto because we've seen some pretty intense market volatility within the crypto environment, and I figured that it would be helpful to kind of help educate and talk about what's actually happening in the market and how to take advantage of it. So what I really want to do in this episode is really bring it back to the basics, break down what crypto is all about, talk about some of the crypto news, and talk about how to take advantage of this market opportunity. Since this is my first episode on crypto, I really just want to talk about the fundamentals of crypto and talk about what's actually happening in the market that's causing Bitcoin to rise and fall right now. So before we get started, don't forget to hit that subscribe button for more content, hit that like button for the YouTube algorithm, and if you guys are listening to this on the pod, don't forget to leave me a 5 stars on Apple Podcast. With that, let's dive right into it. So let's first talk about cryptocurrency and Bitcoin, and what exactly is it? It's not as complicated as you might think. If you asked yourself what Bitcoin is before, you probably got one of the answers. It's a global decentralized peer-to-peer payment network. It allows people to send or receive money across the internet, even to someone that they don't know or trust. Or it's digital gold. And unfortunately, none of those descriptions really help explain it. So let's break it down. Bitcoin can be simplified as a list of people's names and the bank account balance on there. It's not quite the technical revolution you were expecting, right? So let's take a second to figure out what makes the list so special. We first need to realize that our current banking system is just a list of names and balances too. Our society has already made the transition to digital money. We know how many dollars we have based on the number we see in our bank account. But the thing is, your bank isn't actually holding that exact number of dollars in a vault somewhere, it's just a number in their database. A bank is just a list of people's money, and Bitcoin is too. So what's different about Bitcoin's list? Well, everyone we know has access to this list. Now, it's not just the bank who knows how much money everyone has, but every person with a copy of the list knows too. Which is weird, right? If you want a copy, you can just ask. Since everyone has access, the list is very easy to find. In this example, we have someone named Alice, and she's able to share her list with other people like Bob, Charlie, Dave, and Aaron. So why is the shared list helpful? Well, let's take, for example, Bob and Dave are out to dinner one night, and Bob forgot his wallet again. Dave is able to pick up the tab. But now that we're in the 21st century, Bob realizes he has a couple ways to pay Dave back. So Bob owes Dave $7 for dinner. So let's first look at how Bob would be able to pay Dave using a bank, and then see how he would be able to pay him using Bitcoin. So using your bank, you can simply tell the bank the person you want to send the money to as well as the amount. And the bank will charge the number around in their list to make sure Bob now has $7 or less, while Dave has $7 more. Now, while using Bitcoin, there's no need for a bank. Remember, it's just a list, and Bob and Dave each have a copy of it. So Bob subtracts $7 from the balance next to his name and adds $7 next to Dave's name. Money sent, no middleman required. And that's it. That's really Bitcoin at its core. It's a shared list with names and balances. You want to send money? Well, just edit the list. Anyone can make a change and send around their edit to let others know that they made the transaction. Now, we can dive into more technical details like mining, cryptography, and the blockchain, but for the simplicity of this video, I'm just going to leave it at that. So now that we have a high-level overview about what Bitcoin is about, let's talk about why the price of Bitcoin keeps going up. We're looking at a Bitcoin chart since inception, and we can clearly see that Bitcoin has seen a huge price appreciation over the last few years. In 2017 to 2018, there was a massive run-up where Bitcoin ran up to around $20,000 and then fell all the way down to around $3,000 in 2019. From 2019 to 2020, Bitcoin fell in this accumulation phase and was fluctuating around $5,000 to $10,000. And ever since mid to late 2020, Bitcoin has shot up massively, reaching an all-time high of around $67,000. Now we can see that Bitcoin has been selling off massively in the last few days, and Bitcoin is now hovering around a price of $37,000. So why did the price of Bitcoin go up so massively in 2020 and 2021? Well, one of the first reasons is because of inflation and the lowering purchase power of the dollar. Between the year 1975 and just before the coronavirus hit, the total money supply has increased from around $273 billion to over $4 trillion as of March 2020. Since that date, the total money supply has gone from $4 trillion to over $6.5 trillion as of November 30th, 2020, largely due to the COVID stimulus bill. Congress recently passed another stimulus bill of around $1 trillion aimed to help those suffering from the coronavirus. That means since the onset of COVID, around 50% of the world's total supply in US dollars have been printed in 2020 alone. While there are certainly people suffering from a lack of jobs and businesses shutting down, the increase in money supply has significant long-term implications for the purchase power of the dollar. The stimulus spending has led many to fear far greater inflation rates, and rightfully so. To hedge against this inflation, investors have sought assets to either maintain value or appreciate in value. Over the course of 2020, this search for a store of value asset to hedge against this inflation has brought them to Bitcoin. Why is that? Well, there's many different assets that are considered a store of value. Perhaps the most common asset that comes to mind are precious metals, like gold or other things that have a limited supply. With gold, we know that this is a scarce resource, but we can't verify with complete certainty how much exists. So why does this matter to Bitcoin? Well, this is where Bitcoin differentiates itself. It's written in Bitcoin's code how many will ever exist. We can verify with certainty how many exist now and how many will exist in the future. That makes Bitcoin the only asset on the planet that we can prove has finite and fixed supply. The amount of fiscal stimulus that has been injected in the system in the wake of COVID pandemic to stimulate the economy and get things moving again has really caused investors to think about what constitutes a store of value, what constitutes an inflation hedge, and how much they should protect their portfolios. It's important that investors think about that. And I think a lot of them are actually thinking about this juxtaposition between digital currencies, like Bitcoin, which have verifiable scarcity, and thinking about that in the context of fiat currencies like the US dollar, which similarly are printed unlimitedly. Part of Bitcoin's price appreciation can certainly be attributed to the fears of inflation and its use against a hedge against it. While further money printing on the horizon from stimulus packages, as well as talks of student loan forgiveness from the Biden administration, it's fair to say that inflation will continue, making the case of a store of value assets more compelling. Now, there's also the halvening. To further understand why Bitcoin has a verifiable finite limit to its quantity, it's important to understand the mechanism built into the code known as the halvening. Every 210,000 blocks that are mined, or about every 4 years, the reward given to miners for processing Bitcoin transactions are reduced in half. In other words, built into Bitcoin is a synthetic form of inflation because of a reward of Bitcoin given to miners add new Bitcoin into circulation. The rate of this inflation is cut in half every 4 years, and this will continue until 21 million Bitcoin is released into the market. Currently, there are around 18.5 million Bitcoins in circulation, or about 88% of Bitcoin's total supply. So why is this important? Well, as discussed before, the rising inflation and growing quantity of the US dollar lowers its value over time. With gold, there's a somewhat steady rate of new gold mined from Earth each year, which keeps its rate of inflation relatively consistent. Now with Bitcoin, each halvening increases the asset stock-to-flow ratio. A stock-to-flow ratio means the currently available stock circulating in the market relative to the newly flowing stock being added to circulation every year. Because we know that every 4 years the stock flow ratio, or current circulation relative to new supply, doubles, this metric can be plotted into the future. Since Bitcoin's inception, the price has followed extremely close to the growing stock flow ratio. Each halvening, Bitcoin has experienced a massive bull market that has absolutely crushed its previous all-time high. The first halvening, which occurred in November 2012, saw an increase from about $12 to nearly $1,150 within 1 year. The second Bitcoin halvening occurred in July of 2016. The price at the halvening was around $650, and by December of the next year, Bitcoin's price had soared to just under $20,000. The price then fell over the course of a year from its peak down to around $3,200, a price nearly 400% higher than its pre-halving price. Bitcoin's third halving just occurred on May 11th, 2020, and its price has since then increased over 300%. Bitcoin's price increase can also be attributed to the stock flow ratio and deflation. Should Bitcoin continue on this trajectory as it had in the past, investors are looking at significant upside to both the near and long-term future. Theoretically, this price could rise to at least $100,000 sometime in 2021 based on the stock-to-flow model. The narrative of Bitcoin as a store of value has increased substantially in 2020, but not just with retail investors. A number of institutions, both public and private, have been accumulating Bitcoin instead of holding cash in their treasuries. Recent investors include Square, MicroStrategy, Tesla, among many others. Investments of this magnitude suggest strong confidence among these institutional investors that the asset will be a good hedge against inflation as well as provide solid price appreciation over time. Aside from companies flat out buying Bitcoin, many companies are now beginning to provide services for them. PayPal, for example, has decided to allow crypto access to over 360 million active users. Central banks and governments around the world are also now considering the potential of a central bank digital currency. And while these cryptocurrencies are not decentralized, they still show the government's recognition of the necessity for a more advanced payment system than paper cash provides. This further lends merit to the concept of cryptocurrencies and the convenience in general. And as a final note, there's maturity. Today, access is easier than ever. Licensed and regulated exchanges that are easy to use are abundant in the US. The number of places that Bitcoin and other cryptocurrencies are accepted as payment is growing rapidly. The market today has developed so much more than from where we were back in 2017. It's just the more robust 24-hour two-sided market that is starting to act more and more mature with every day that passes. Along with this, the confidence showed by large institutional players by both their offering of crypto-related products as well as blatant investment into Bitcoin speaks volumes. So now that we have some backstory of why Bitcoin's price appreciated so high, let's talk about why Bitcoin has been falling pretty drastically in the past few weeks. First off, Elon Musk recently came out and said that Tesla will no longer accept Bitcoin over climate concerns. Musk tweeted on May 12th that Tesla has suspended vehicle purchases using Bitcoin. They're concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. He ends his statement by saying that Tesla will not be selling any Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. Shortly after, Musk implied that Tesla may sell all their cryptocurrency. Musk had implied that Tesla may have sold the rest of their Bitcoin holdings, but he later clarified that they had not sold any Bitcoin. They did, however, stop the use of Bitcoin to be able to purchase their Teslas. The second catalyst that pushed Bitcoin lower is that China banned financial payment institutions from cryptocurrency businesses. In the same light, they also warned investors about speculative crypto trading. Under the ban, such institutions, including banks and online payment channels, must not offer clients any service using cryptocurrency, such as registration, trading, or clearing and settlement. They say, quote, "Recently, cryptocurrency prices have skyrocketed and plummeted, and speculative trading of cryptocurrencies has rebounded, seriously infringing on the safety of people's property and disrupting the normal economic and financial order. China has banned crypto exchanges and initial coin offerings, but has not barred individuals from holding cryptocurrencies." Now, the thing about this China regulation is that this is not their first move against digital currency. In 2017, they shut down local cryptocurrency exchanges, smothering a speculative market that accounted for 90% of global Bitcoin trading. So this was definitely a shock to a lot of investors. However, I think this is kind of overblown, a lot of FUD, and something that is kind of expected due to the nature of China's governance over their people. Lastly, this morning, while Bitcoin and other cryptocurrencies were way down, Coinbase, Binance, and other major exchanges shut down temporarily. Thankfully, these exchanges like Coinbase were down for only about an hour and are back up for investors to start trading again. And one of the main reasons was due to network congestion. Both Coinbase and Binance paused their ETH withdrawals, and I believe that led to a lot of people just dumping their shares and getting margin called off of their investments. So is crypto a good long-term investment? Well, whether crypto assets pay off for investors will ultimately be determined by whether they can achieve wide-scale adoption. Bitcoin, for example, is seen by many as an investment akin to gold. Unlike fiat currencies such as the US dollar and Japanese yen, which can seemingly be printed at the will of politicians, Bitcoin has a maximum supply of just under 21 million coins. Many investors thus view Bitcoin as a scarce asset that could increase in value as fiat currencies depreciate. Others believe Bitcoin could eventually gain extensive use as a digital form of cash, with some going so far to say that it has the potential to become the first truly global currency. Ethereum, meanwhile, wants to serve as a global computing platform. It serves as a launchpad for decentralized applications, or dApps, which are open sourced and not controlled by a single organization. Ethereum allows the use of smart contracts, which have their terms written directly into code and can be executed automatically. These technologies could disrupt massive industries such as real estate and banking, and potentially create entirely new markets. If Bitcoin and Ethereum can achieve these aims, then investors who buy their tokens today will likely be richly rewarded in the years ahead. But there are many other projects competing with these cryptocurrency leaders, and their success is not assured by any means. So where does that leave us? Well, that leaves us with the opportunity to buy some digital assets which have taken a pretty big sell-off in the past few weeks. If you've been agreeing with what I've been saying earlier and believe that there's still a big opportunity for digital currencies moving forward, then I believe this is a great opportunity to buy and hold for the long term. I still believe that there's a lot of tailwinds behind cryptocurrencies that will help push up the stock price back up to where it was about a few weeks ago. Now, that leaves us with a question: how do we take advantage of this dip, and what cryptocurrencies should we buy? Well, now this boils down to asset allocation. And I believe the easiest way to do this is to primarily put most of the holdings into Bitcoin and Ethereum. Bitcoin is the OG, it's the number one cryptocurrency, and it still has the potential to be the first truly global currency. I would put 50% of my crypto portfolio into Bitcoin. Second, we have Ethereum, which is the second largest cryptocurrency. Ethereum, as mentioned earlier, unlike Bitcoin, does not have a use case of digital form of cash, but instead is a global computing platform. Ethereum allows for the creation of decentralized applications, and as we progress into the future, I believe that there's going to be a lot of opportunities to use Ethereum into different technologies. I would put about 20% of my portfolio into Ethereum. Lastly, the other 30% I would hold in either other altcoins or alternative projects that you guys are interested in and feel very strongly about future potential, or to simply hold it into cash for buying opportunities. Some very notable coins that you guys should look into are Cardano, Polkadot, XRP, Uniswap, Chainlink, and the list goes on. So that would be the asset allocation of your crypto portfolio. But now let's talk about how much of your percentage of your net worth should be in crypto. Now, I believe it's pretty fair to have around 5 to 10% of your net worth into cryptocurrencies. I believe this is a good number that has a decent amount of exposure for the upside for cryptocurrency if it is able to live up to its potential. However, it's small enough exposure that if all cryptocurrencies fail and prices drop drastically, then you aren't leveraged to the point where it's really going to hurt your overall portfolio. For my personal preference, this is a good number because it lets me be able to sleep at night and not have to worry about whether or not cryptocurrencies go up and down. But it's all based off of the risk tolerance that you have as an investor. Some final points that I just want to say regarding cryptocurrency is that a lot of these assets don't have any intrinsic value. And the value of the coin is based off of what other people value the coin as. So if cryptocurrency's prices dump and there's no buyers, then unfortunately you might left be holding the bag with these crypto assets that aren't worth what it was when you paid it. I think it's very important to remember that at this stage, cryptocurrencies are still in its infancy, and they aren't seeing worldwide adoption in many different cases. Right now, there's a lot of optimism priced into these coins, and to be honest, they are pretty overvalued. I believe a good investment strategy is not to simply hodl, which is the common term for cryptocurrency investors to just hold their coins forever, but to have a good investment strategy and to set stop losses in case cryptocurrencies start taking a dip. This can be a very profitable industry and area to get into, but make sure that you have the right risk mitigation tactics and safeguards to make sure that you are safe in case of a downturn. I still believe cryptocurrency still has a lot more room to run, and I am a holder of certain cryptocurrencies. However, my advice is to just tread with caution, pick coins and projects that you guys are very in tune with and believe in the potential of the long term. So that, guys, that was my long-winded overview of Bitcoin, cryptocurrencies, and what's happening in the market right now. I hope you guys got a lot of value out of this. I really enjoy looking into cryptocurrencies and helping educate others about this topic. If this is something that you guys are really interested in, I'll be happy to continue looking into this further. So that, guys, be safe out there. Have a great day. I'll see you in the next one, and let's go get that bag.